Welcome back. What you're seeing on the screen right here is called the AG layer, which is Polygon's interconnectivity ecosystem, which is building basically the future of the internet. And we're going to be going through this and kind of really understanding what the Polygon trade is, because a lot of people are not bullish on Polygon. A lot of people don't even know what Polygon is, but we're going to be explaining in today's video why Polygon may be the most undervalued crypto in the entire market. And we're also going to be talking about what happened with SWI. SWI had a major disaster. And we're also going to break down why institutional Wall Street investors are buying WorldCoin. Don't forget to give this video a free thumbs up, hit the subscribe button. We upload almost every single day of the year. We do deep dives like today into certain cryptos, and we also talk about what's really going on in the rest of the market and try to understand what is the right investments for our portfolios. Nothing I say is financial advice. Do your own research. Let's get right into it, and we're going to be starting right here with Polygon. Now, as I've been explaining for a few years now, the focus is Ethereum. What we're going to be talking about a little bit later in this video is what happened with the SWI network. And that is really an indicator of, what it all comes down to. It all comes down to trust, long-standing activity on the blockchain that has basically had no hacks, no major issues. Now, we know Ethereum bridges have had issues before, but generally speaking, when we're looking at usage and we're looking at the metrics, the fundamentals of the network, Ethereum is the number one. This is why Ethereum is the number one crypto outside of Bitcoin. But again, Ethereum's ecosystem needs these layer twos, and that's where Polygon comes in. But a lot of people don't focus on that because they're focused on SWI or Solana or this coin or that coin. But at the end of the day, it all comes down to the fundamentals. And this is what we've been talking about as we are exiting the, or entering the final stages of the bull market for this cycle. We really have to go back to fundamentals, because everything is either hype or fundamentals. And usually hype lasts longer because everyone's like, oh, this coin's going to do this, this coin's going to do this, this coin's going to do this. But at the end of the day, it's what are these coins actually doing, not what they are going to do. And this comes into Polygon. So this user on X, who is Web3 and ZK and Polygon and Ag Layer independent researcher on X, said in May of 2024, which was about a year before I'm recording this video, Tron had 3 times more stablecoin transactions than Polygon. In May of 2025, Polygon is ahead of Tron by 10%, which, guys, you have to think about that. Tron had 3 times more stablecoin transactions than Polygon, and in 1 year now Polygon is ahead. Tron is the go-to platform for tether transfers and settlement in some parts of the world, and it still remains one of the leaders in that space. But while fees may be acceptable for such transfers on Tron, it's not yet destined to become the true payment infrastructure. Users will not pay $1 or $2 to $3 transactions in everyday life. For comparison, fees on Polygon are literally thousands times lower, and the network is still set to see major speed and performance improvements. And I would agree. We know that the layer twos were created to take some of the strain off of layer one, and the strain equals higher gas fees. And so it's the strain of the actual transactions and scalability, but it's also, affecting the users who are transacting on the network. And so come in the ag layer, or the aggregation layer. Sandeep Nawal said, and he's by the way, the founder of Polygon. He said the goal of the ag layer is to make chain boundaries invisible to users. And who are the users? You and me. And so we've heard about many interoperability bridges. We've heard about interoperability chains like Chainlink and Oracles. But now we see the ag layer. And the ag layer is just a little bit one step up, I guess you could say. The aggregation layer solves blockchain's fragmentation by enabling sovereign chains to securely share liquidity, users, and their state. Remember what we've been talking about for years on this channel. There are a lot of cryptos out here, and a lot of cryptos in the top 20, top 50 that are siloed blockchains. And what do I mean by siloed blockchain? What I mean by siloed blockchain is they don't have interoperability. They're not on the bridges or connected to Chainlink or any other interoperability features that are actually used by developers around the ecosystem of crypto. There are a lot of these siloed blockchains. We'll go through the top 15 and tell you which ones are siloed. So that way you can kind of get an understanding of what I'm talking about here. While Bitcoin is somewhat siloed, it does have connections, and there's wrapped Bitcoin, wrapped Ethereum, so you can interoperate through Bitcoin. We also know about Internet Computer now allowing basically through chain fusion technology on the Internet Computer the ability to read and write onto the blockchain, the Bitcoin blockchain, which enables DeFi between Internet Computer and Bitcoin. So Bitcoin is not siloed. Ethereum clearly isn't siloed. We're not really going to count stable coins, but stable coins are not siloed either. That's how they actually go onto the chain because they're interoperable, right? And we're going to get to the stable coins in just a minute. XRP, this is our first siloed coin. There's no interoperability, there's no DeFi, there's no bridges, there's no compatibility with the stable coins, Tether or USDC. And so what can XRP actually do? What can XRP actually do as some companies and countries and payment rails are going to use one chain and others are going to use another chain? Well, XRP is supposed to be the payment rail for the world, but there's no interoperability. And by the way, the people who say, but Cryptoviser, they're doing it, they're going to work on it. Here's the deal. We're in 2025. If they wanted to, they would. If they wanted the stable coin, they would have already had it. Like, that's the bottom line. And now we hear Ripple is trying to buy Circle to leapfrog and basically, get all of those features, all of the interoperability, all of the usage, all of the interchain connectivity. And so far, Circle has said no, but we'll see how that plays out. Anyway, Binance is not a siloed chain. It's very interoperable. Solana, very interoperable. Dogecoin, siloed. No interoperability, no connections to other chains for the most part. Cardano, siloed. No interoperability, no connections to other chains, no native stablecoin usage on the chain from USDC or Tether. Tron is not siloed. Tron does have interoperability. Sui does have interoperability. We're going to be talking about Sui a little bit later in this video. Chainlink obviously is the interoperability layer, so it does have it. Avalanche has interoperability, and Hyperliquid has interoperability. So you can see in the top 15, there are two major cryptos that have zero interoperability, zero DeFi, and zero connectivity to the major stablecoins. This is a problem. And they're not trying to solve it either, by the way. But Polygon is. And so what is the AG layer? This is the aggregation layer. The AG layer is a decentralized protocol that sits between blockchain ecosystems. It offers unified liquidity. Chains connected to the AG layer share liquidity, enabling seamless cross-chain asset transfers, low latency interoperability. Chains can safely interact in the near real time without waiting for Ethereum's finality, right? We know this is why layer 2s were built, to make things faster. And so you don't need the finalization on Ethereum, on the Ethereum blockchain for the AG layer to work. When you're thinking about like how that interoperability and low latency works, it's because they're sharing and unifying their liquidity. That's my understanding of it, at least. And also they have asset fungibility. Native tokens remain native across chains, eliminating the need for wrapped or synthetic assets. AG layer is not a layer 2 or a shared sequencer. Instead, it acts as an interoperability layer that prioritizes safety, sovereignty, and scalability. And so that's the general kind of understanding of it. This is what the AG layer visualization is. It shows you basically the interconnectivity between chains. You can see chain A, chain B, chain C, Ethereum, and the unified bridge that brings everything together. And you can do a little bit more digging on this. You're looking at a 3D representation of the technical structure of the AG layer. You're seeing transactions from different networks climb the trees that make up the AG layer. And by the way, because I'm recording, it's making everything very slow, but you can see these transactions moving their way up to get to the unified bridge to move. And this is all happening very, very rapidly and instantaneously. And so that is what the AG layer is. This is one of the biggest things in crypto, I believe. And Polygon is at the center of it. And meanwhile, Polygon is, from a price perspective, in my view, highly, 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 highly undervalued. And again, I could be wrong on this, but I've been watching the Polygon ecosystem for quite a while, and the technologies and the capabilities. And I cannot understand why the price has not reflected the technology that it has, the fundamentals that it has. But this goes back to hype versus fundamentals. And again, we're going to be talking about SWI in just a few minutes here to kind of compare the two, because SWI is a newer blockchain potentially built on hype and doesn't have the long-standing trust, security, and transaction history that Polygon and Ethereum do have. And again, when we're thinking about Wall Street, when we're thinking about the big money, they want these networks that work. They want the networks with high interoperability, high usage. And so you're going to be probably asking, well, Cryptoviser, what is the usage on Polygon? Well, before we go there, I just wanted to play this clip for you, where basically one of the CEOs of Polygon Labs basically said since last year that you will be able to use the ag layer, not just on Polygon, but on many other ecosystems. And now with the ag layer, you can build on the OP stack, which obviously is optimism, right? So this is another network that you can also use and build on, and it's connected to this kind of whole interactive layer of different blockchains. Let's listen to what he said 1 year ago when he basically saying that he predicted this. This is December. Let's listen to him.
EVM chain to the ag layer. And so you'll start seeing OP stack chains connecting to the ag layer, Orbit chains connecting to the ag layer, Polygon CDK chains connecting to the ag layer. But like, frankly, we don't care if it's a Polygon CDK chain or an OP stack chain, like just connect to the ag layer.
And that is exactly what they're doing. And so again, it's not about what these chains are saying they're going to do. This was said back in December. Now we're 5-6 months later and boom, it's happening. So this is a big difference between the hype coins and the hype chains and the chains that are promising the world versus the chains that are actually doing. There's a difference between saying and doing. And this is what we're looking for, especially in my view, in the final stages of the bull market. We're in the 12 to 18 months after the Bitcoin halving. And this time, historically, in the Bitcoin cycles, is when we see the most volatility and the most upside in the markets. And so Ethereum has been underperforming. And so maybe Ethereum and Polygon are both underperforming because they're built within the same ecosystem, right? Polygon is built as a layer 2 for Ethereum. But let's understand where the data is, because remember what I say, it's not about what they're promising, it's about what they're doing. And this is what all of Wall Street is looking at. They're not looking at your favorite coin. They're looking at Bitcoin. That's it, period. Then they're looking at Ethereum. And because Polygon is combined with Ethereum, and it's the layer 2 for Ethereum, and that's where most of the building goes on for Ethereum, what do you think that they're going to be using? Anyway, Vadim on X stated this. And by the way, I think this is the same user we used in an earlier tweet. He said Polygon has seen a $52 million liquidity net flows over the past 7 days. This was in towards the end of May of 2025. This chain is leading all others and is almost twice the next one, which is Ethereum. Hopefully the trend continues. And so what you can see here is top inflows over the last 7 days. Ethereum, number 1. Top outflows over the last 7 days. Ethereum, number 1. But the top net flows over 7 days, meaning you basically offset what the outflows and inflows are, like what was the inflow altogether, right? And you can see Polygon is at the top with $118 million of inflows, or total flows, I should say. 66 million of outflows, 52 of net. Sorry, I'm doing this completely wrong. I don't know what's going on. Maybe I didn't drink enough coffee. I did drink coffee before this video, but let me rephrase. Let's refresh. Okay, so inflows were $118 million. Outflows were $66 million. So the net inflow was $52 million, which is significantly more than what we're seeing with Ethereum here, because the Ethereum inflows and outflows were almost even. And so that means the actual net inflows were much less than Polygon. So why are we seeing this? Right? Everybody says Ethereum's the best, Solana's the best, Polygon's the best, Cardano's the best, XRP's the best, but which one really is the best? Well, based on this data, the biggest inflows is happening on Polygon. Why? Well, everything that we just discussed. We also are just hearing that Blind Pay, which says that they're the payment infrastructure for developers, one API, multiple payment rails, and it's backed by Y Combinator. And Y Combinator is a big kind of seed venture capitalist fund and organization that helps kind of build up these companies. I guess that's the easiest way to explain it. But anyway, Blind Pay is redefining how money moves, powered by Polygon. Access global on and off ramps in 50 plus countries with US named virtual accounts, fast settlement, local payment rails with built in compliance for businesses and developers. Over $37 million in stablecoin volume processed on Polygon in 2025. Real world payments delivered at scale. The future of payments is programmable. And so this is what we're seeing as well, right? A lot of these payment providers that want to utilize DeFi and tap into DeFi, they're choosing Polygon versus Ethereum. They're choosing Polygon versus Sui versus Solana versus your other favorite DeFi coin. And this is because it is backed effectively by the Ethereum network, right? It's built on top of the Ethereum network. It is the premier layer 2. It's the premier scalability layer for ecosystems. You know, Solana says, well, Solana doesn't need a layer 2. We can do everything on layer 1. Yeah, but that's a single point of failure. And that's also what we've seen in the previous cycles, that Solana was not able to process the transactions that were getting put through, and the network kept going down. Now, while that hasn't happened in quite a while, what is stopping it from happening again? The whole point of the layer 2s is to take some of the strain off the main layer, right? Off the Ethereum ecosystem's layer. Anyway, we also are hearing Banco Industrial, which is Guatemala's largest bank, has adopted blockchain fintech firm Suku Pay stablecoin rails for their customers to send remittances from the United States. Suku Pay is built on Polygon and uses the USDC stablecoin. Remittances to Guatemala number around $21 billion annually, which is nearly 20% of the country's GDP. So 20% of their GDP is getting moved or remitted to Guatemala every single year, $21 billion. And obviously, if you're utilizing these ecosystems of blockchain, it's probably significantly cheaper. We talked about this a few years ago when Coinbase enabled effectively free transfers to Mexico. And if you transfer money to Mexico via Coinbase, you can like pick it up. It's similar to like Western Union at what they call OXXO locations, which are similar to like 7-Elevens, and no fees, right? So people used to be paying 10% on each end for sending Western Union wires or whatever. Now it's effectively free. And this is what they're doing in other areas of finance as well. And so, yeah, Suku World, while it may not be Polygon, they're built on Polygon. So the more that's building, the more that's getting released, the more technologies that are getting deployed. How can people be bearish? This is what I really don't understand fully. And so let's look at the data, okay? Let's look at the data. The network's real economic value, these are transaction fees and out of protocol tips. You can see that since June of 2023, it has come down, right? We've seen this similar to the charts that we're seeing with Ethereum, where fees are very low on Ethereum right now because there's very low usage, and everybody's really focused on these other coins. Like, oh, well, I'm not going to make any money on Ethereum, so let me get into Sui or Solana or whatever one of these other coins that are literally at all-time record highs and don't have the trust of time of these blockchains being up. Because if your blockchain is 1 or 2 years in existence, how can it really have the trust versus Polygon or Ethereum? It can't, right? It just can't. And so we can see total application revenue. This is sourced from DeFi Llama on the weekly. You can see it's pretty much stable, maybe a little bit lower. But this is what I'm more interested in, the Polygon transaction activity. This is on a weekly basis. You can see the number of transactions. While it did peak in 2023, we have seen some kind of leveling off, but we are still higher than we were in 2023 in more transactions. We're seeing about per week, about 20 million transactions. This is a lot. I mean, some blockchains, they don't even have 20 million transactions total. This is 20 million in a week. And this is another really interesting one right here. I know it may be a little bit small, but effectively, well, that's too big. This chart shows us the stablecoin supply and transfer volume on Polygon. And remember, USDC and Tether, these are stablecoins. So this is like dollars moving around. And so this can tell us a lot. And so what we can see here is that from 2023, we've had significantly more usage of stable coins. So stable coin supply and transfer volume, the week that I'm recording this video, is $1.7 billion. That's right, 1.7 billion. And so what does this mean? Well, this means that more people are utilizing the chain. More is being transferred through the chain. I mean, there's some chains that literally have zero stablecoin activity, like we just talked about, because they're completely siloed chains. So how can those chains compete with Polygon? They cannot. Polygon is there, right? And people are going to say, but Cryptoviser, what about Solana? What about it? What about it, right? If we're going to compare Solana stablecoin usage with Polygon stablecoin usage, let's do it. Because remember, USDC is the digital dollar. And so what exactly does that mean? Well, if we go to the Circle website, which shows us USDC supply on Polygon, $562 million is on Polygon right now in terms of stablecoins. And this combined with the usage of the stablecoins on a weekly basis. I mean, let's pull this up on a daily basis. Okay, the week before I'm recording this, on a daily basis, the supply of stablecoins is $1.7 billion. This is USDC and Tether and transfers. That's the supply. Let's look at the volume. The volume on a daily basis on the blockchain in stablecoins. Look at this. I don't know if you can see the number on the screen. Let me make this larger. Now you can see it. We're talking about almost $6.5 billion, $4.8 billion. This is per day, $3.2 billion of stablecoin transfers of usage, the volume, $5 billion a day of stablecoin usage. And by the way, this is more than the entire market cap of Polygon. Polygon's market cap is $2.6 billion. Think about that. The valuation of the entire network is $2.6 billion. And they are transacting on a daily basis, basically double their market cap just in stable coins. And by the way, there's other cryptos out here with higher market caps, hence XRP, Cardano, Stellar, that don't have the stable coins connected, and they have multiples higher in market cap, right? So Cardano's market cap is about 30 billion. XRP's market cap is $142 billion. And meanwhile, zero stablecoin usage, which means there's no actual money flowing through those ecosystems. There's no actual dollars. There's no real money on those ecosystems. But they have 104. Guys, this is 70 times higher market cap than Polygon. No stable coins, no DeFi, no interoperability, no USDC, no digital dollar. And so if it has no on all of these things, how can these ecosystems truly say that their fundamentals are better than Polygon when I just showed you every single metric that shows that, no, that's not accurate. Polygon is better. And so listen, this is just my observation, my analysis of the market. Maybe I'm wrong. I'm not telling you what to invest in or what to do with your portfolio. I'm just telling you what I'm observing in the market. And I'm going to be doing a whole separate video where we're going to be deep diving into what's going on with Polygon and the whole Polygon ecosystem, because it needs its own video. I mean, this part of the video is over 20 minutes, and we got past very, very little about the Polygon ecosystem. And so I don't know why people are not focusing on, I think that people are not focusing on these coins, and Ethereum has underperformed, Polygon has underperformed. I really think just because of the hype. And what is the hype all surrounding? Newer coins. And so we're going to be, well, I guess we could talk about it right now. White House Crypto Czar says that the stablecoin bill will unlock trillions of dollars for U.S. Treasury. Not just for the U.S. Treasury, but the whole digital economy. And so if USDC is the digital dollar, or even Tether becomes the digital dollar, but it's going to be USDC. I've been saying this for years on the channel. And your chain is not connected to USDC, that's a failure. That's a failure. A few years ago, I was talking about Cardano getting USDC over and over because I really wanted to see that happen. Reinvested in Cardano in the bear market because I thought they were going to do it. And then once we saw some KOLs, right, key opinion leaders in Cardano trying to push to get funding to get USDC integrated, they got shut down by the whales immediately. Like within 2 days, they got shut down by the whales, telling them to like shut up, basically. And for me, that was it. I'm totally out of Cardano for good. XRP for good, or at least until they can get up to speed with the rest of crypto. But this is where the hype is. And it's not just with these two. These are just siloed blockchains like we were just talking about. But once the stablecoin bill passes, these chains that are not connected to Circle, they're screwed. They're absolutely screwed. And so this goes back to what we were just talking about the other day, where the CEO of Bitwise said we should stop looking at these chains based on their market cap. We should start looking at them based on other metrics, like their usage. In my view, the DeFi usage, the interoperability, compatibility, or capabilities, I should say, the stablecoin issuance on chain. And I'm talking about native stablecoins issued directly from Tether or Circle. But you know what? A lot of people are like, but Cryptoviser XRP is better. It's going to go to $589. It's like, what are you talking about? A $10 trillion market cap for XRP, and it doesn't even have stable coins or DeFi or any other usage outside of that. Give me a fucking break. Give me a break. Anyway, moving right along. Sui. So Sui ecosystem is rocked by a $200 million Oracle manipulation attack on its largest DEX. Now, here's the deal. When we're talking about trust of these ecosystems, trust really comes with time, right? Because a DEX getting attacked, well, let's understand a little bit more about this first before I give you guys my opinion. Tokens in the Sui ecosystem have been sent tumbling due to a $200 million Oracle exploit that has led to liquidity pools being drained. And by the way, this happened like overnight. The Sui ecosystem basically saw this 200 million stolen from liquidity pools. Notable Sui meme coins like wait. Let's pause right here for a second. Meme coins. This is what we're talking about again. I get criticized on a daily basis in the comments by people saying, Cryptoviser, you're just salty that you didn't get into meme coins. Meme coins isn't the only thing that Solana has. Solana has way more than meme coins. And I'm like, okay, what? What big thing has Solana dropped this year or last year that is better than meme coins? Nothing. I mean, the data on chain shows us that meme coins was what was pushing Solana up. And so the meme coin fiasco I thought was over, but apparently it's not. And I freaking hate talking about it. But anyway, notable Sui meme coins like Lofi, Sudang, and Squirtle. Okay, it's hitting 76%, 80%, and 97% in just an hour. Probably as they should. Anyway, the popular Cetus token dropped 53% as well. 46 Sui tokens made double-digit losses in the 24 hours after the DEX issue. According to a cybersecurity firm, they said the attacker exploited vulnerabilities in Cetus's protocol smart contracts by deploying spoof tokens to manipulate price curves and reserve calculations. And by the way, Cetus is their DEX. That's what they're talking about here. This allowed them to extract real assets from multiple liquidity pools, including the Sui USDC pool. The stolen funds are being converted into USDC and bridged to other chains. The estimates are at approximately $200 million worth of assets stolen due to the exploit. The attacker had about 164 million in Sui and 61 million of USDC and Ethereum. A Sui spokesperson declined to comment. Cetus paused their smart contracts to prevent further losses, and the exchange issued a statement stating that an incident had been detected and the team was investigating it. And so here's the deal. Like, bridges are going to be attacked. Exploits are going to be found, and bugs in the protocol and in the code. That's going to happen with every ecosystem. Like, it's just how technology is, right? Like, nothing is perfect. But they need to get close to perfect, right? Because these kind of issues, it's the same thing like we were seeing with with a lot of the draining in other ecosystems. Like Ethereum was having bridge after bridge getting exploited because of code vulnerabilities. And so obviously this is through learning and through just time going on to figure these things out, and for the developers to realize like we have to really clamp down on this, whatever those issues or bugs or exploits in the protocol are, and they need to fix them. So I don't necessarily see this as a huge negative for crypto or even for SWI, but it is important that you as an investor understand that this could happen, and it could happen at any moment, and it could be worse than SWI, right? Nobody foresaw what happened with Terra Luna in the previous cycle. Nobody foresaw what would happen with Celsius and Voyager and BlockFi and Genesis and FTX. People didn't see this. Some people were like on this channel, we were able to identify things didn't look right. But you don't know, like the market does well and your coins do well until they don't. We can be in a bull run until we're not. And it could happen instantly. And so this is where it is important as an investor to make sure that you are in investments that you believe are going to go higher, that you believe are secure and have usage and have the data to back all of that up. But even with all of that, something like this could happen and you could lose 100% of your value. I've had coins go down 98%. I've had stocks go down 98% because something occurred or the company went bankrupt or whatever the situation is. This could happen with any investment, right? You could own a home and then it's worth nothing, right? Or very, very little. Or you find a pipe needs to be replaced in the whole home and it's going to cost, $500,000. And you're like, wait, what? That's how much the house is worth. Like, this is worth nothing effectively, right? Diversification is key, but also in my view, not getting caught up in the hype. SWI is a newer chain. It's being pushed by every influencer and every trader on social media. But does that mean it's right for me? I don't think so, because they're looking for these early investments where they're getting in at pennies on the dollar. Like you can see here, it was at 52 cents in 2023, under 50 cents, 40 cents. And so right now it's already 10x and it potentially going to go higher. And we're at a $13 billion valuation. But what is SWI? What is SWI? What is the network? What is so amazing about the network? It says here, SWI is a groundbreaking layer one platform designed to support the needs of global adoption by offering secure, powerful, and scalable development platform. At its core, SWI leverages a novel object-centric data model and secure move programming language to address inefficiencies prevalent in existing blockchain architectures. So that told me a lot without telling me anything. Like, what are they doing? What kind of major partnerships do they have? What kind of interoperability do they have? What kind of real usage do they have? Because meme coins is not real usage. And if you look at Solana, at the beginning of 2025, when the meme coin fiasco was going on, guys, they were extracting hundreds of millions of dollars. The developers of those meme coins, like the Argentina meme coin, told the world that they were extracting hundreds of millions of dollars of money from those meme coins. And so that's not sustainable for the meme coins or for the underlying network. This is why we saw a major drop in the price of Solana and a major drop in all the metrics on Solana, revenue, fees. I mean, I remember in January into February, the fees, the revenue that the validators of the network were making dropped by 97% because the meme coin fiasco was over. So that's why all of the metrics on Solana were going higher. It wasn't based on fundamentals. It wasn't based on high-level integrations in the back end of this technology. And meanwhile, look at what Polygon has been doing for the last few years, kind of under the radar. Like most people in crypto are not talking about Polygon. They're saying, oh, it's a legacy chain. Nobody's paying attention to it. Oh, nobody needs a layer two. Solana's better. SWI's better. And it's like, is it really? Because if you just look, I wish there was like data aggregators where we can compare these chains in terms of all of these metrics that we just went over, because the usage on Polygon is extreme, and the reason is because the usage of Ethereum is extreme. And meanwhile, all these other ecosystems with all of these meme coin nonsense BS. I mean, the MIU coin on SWI, the me, I don't know even how to pronounce it. The market cap is $125 million. Like really? Really? Lo-Fi, 58 million. So is all the value of SWI from the meme coins? The SWI meme coin market cap is $284 million. By the way, that's 7% higher in the last 24 hours, even though the hack or exploit or whatever occurred in the last 24 hours. It's like, what is going on? These, in my view, this is an indicator of peak market. This is an indicator, in my view, that the market is in the final stages of the bull run. And that a lot of these coins are not going to, they're just not passing the test of it's better, right? Is Solana better than Ethereum? No, it hasn't proved that yet. By usage, by smart contracts deployed, by interoperability, by layer twos, because Polygon is part of Ethereum. So really, I combine the market caps of these two networks. And so in the final stages of the bull market, what we are going to see, in my view, is the rotation out of these speculative coins, SWI, Solana, some of these others, and it's going to be drained as we're getting towards the end of the cycle. Because remember, if these blockchains really had the capabilities and technologies that they say that they have, and they are actually better than Ethereum and Bitcoin, why are all of the influencers pushing it and not the developers, right? Why are all the influencers pushing it but not Wall Street? Why are all the influencers pushing it but yet we're not really seeing that kind of integration that we're seeing on Ethereum and Polygon and Bitcoin? I just think that it's overhyped. And so if the traders are the one pushing it and the traders are going to pull their profits, what are they going to do? They're going to leave you holding the freaking bag. And while you're holding the bag, they're going to take their profits from getting out of these coins and they're going to be putting it into the fundamental coins that we just talked about. Ethereum, Optimism, Polygon, and so on. And so those coins that are underperforming, they may be underperforming because all the traders are focusing on SWI. Like, guys, SWI, this is where it's at. SWI, it's the next Bitcoin. No, it's not. It's not even up to where it needs to be. Regardless of this the exploit or the hack or the bug or whatever it is, doesn't matter. The money is going to start moving. What is happening with SWI right now because of the exploit? Yeah, we may see a little bit of a jump in these meme coins. But the same thing that happened with Solana meme coins and Solana's network is going to happen with SWI, in my view. And that means we're going to be taking a round trip back down and going back to the fundamentals. And I don't know why SWI's not pulling up. And where are the fundamentals? The fundamentals are in the coins that have been underperforming. And so in the coins that have been underperforming, we're potentially going to see a massive push of money back into that. Because think about how much profits people have been making on this, 10x already. You don't think that they're taking profits? They are. And they will continue to take profits. And they're going to rotate those profits into other underperforming cryptos that have the fundamentals. And then we're going to see the rise in those. And then the bull market will come to an end at some point. That's what I think is going to happen. And by the way, you don't have to believe what I'm saying. Look at the data. Look at the data. Ethereum co-founder sent $262 million of Ethereum to Kraken. Now, there's some speculation that this was to cover a margin call. There's some speculation that he's just moving it into different wallets for safety. I don't know, but what we do know is that historically, Ethereum Foundation and Vitalik have sold towards the top of the market. That is what they have done historically for years. And while many people say, well, the reason that was the top of the market is because the Ethereum team sold, I disagree. I think that the Ethereum ecosystem is very in tune with where the market is. And I mean, where we are right now in May of 2025, this is the same place that we were in 2021. And in May of 2021, it may have been June, but I think in May of 2021, remember, that was the Dogecoin pump, where everybody was like, oh, Elon Musk is going on Saturday Night Live, so he's going to pump Dogecoin. So Dogecoin's going to $1. And it went to 70 cents, came down, and never went back. And I mean, we may go back now, but it hasn't been back since then, 4 years ago. And also, around that same time frame in 2021, Vitalik said in an interview The bubbles already popped. They popped at the beginning of the year. And in my head, I'm like, wait, everything's pumping because of this whole Dogecoin thing. How did the bubbles pop? But it put me on alert, because just because the bubbles pop doesn't mean you're going to immediately see the deflation. The deflation of the bubble will take some time. But it tells us we're in the final stages of the bull market. And so we have to position appropriately and look for where we want, if we're going to deploy right now, deploy capital or reallocate the portfolio now to get the maximum potential gains. We have to know which coins have the fundamentals, because I believe the valuations are going to go back to the fundamentals, because the market cap perspective, this is just based on valuation. It's not based on the technicals, the usage, the interconnectivity, the potential from a technological perspective. And so you could say, well, the market will price that in. And if that's true, I don't think the market has priced that in just yet. Hopefully you guys enjoyed this conversation. Don't forget to give the video a thumbs up, hit that subscribe button. We upload every single day to bring you the latest happening in the financial world. I'll see you on the next video. Invest responsibly and crypto on.